Oops, stop. And we are live now.
Okay. I'm always doing something, right?
Oh, that's what we do. We have
Hey,
fun with
investors.
technology. Hey, everyone.
Well, happy Wednesday and welcome to our Bookworm Investor Chat. Thank you for coming. And we're going to start today. This is the end of June.
Yeah, the last day.
This is the end of the second quarter.
Mm-hmm.
And let's see, what did we ended it on I think a mixed bag here. Let's see, both the Dow and the S&P 500 were positive and the NASDAQ was negative. So still a good note. So let's start our investment chat, speaking about some decisions that we at Bookworm made and talking about why we made the decisions to do what we're doing. Okay.
Awesome. So there's some changes.
Well, I don't know if it just kind of reinforcing that we're on the right path with the type of companies that we decided that we're going to focus on.
Yeah.
Mm-hmm.
So it's regarding to like the quiz we have out there. We put that quiz out there specifically to give us an idea of what is working for you, or are we on the right track as to what information we're offering you guys when it comes to investing in the stock market, because everyone has different needs or specific knowledge. So today, Marcia's going to answer a really cool question because there's nothing more than knowing what we're going to be focusing on. So based off the information we've gotten so far, this is what we're going to be focusing on. And Marcia, I want you to tell us what here at Bookworm we're going to be focusing on.
Okay. So first, I want to thank everyone out there who has taken the quiz. And if you haven't, we can give you the link to take the quiz.
Yes.
But that quiz served a purpose, not only for you to help you determine your investor style, but for us at Bookworm. And we analyzed that data for those of you all who took the quiz. Hi, Nancy.
Hey.
For everyone who took the quiz, what we did was we looked at that data because we wanted to find out, okay, so who are we serving? And what we found out was out of all of the participants, that 61% of you all are actually moderate investors. 61%, over half of you all. And about 25% of the people that took the quiz are actually conservative. Very few, only like 10%, came out as aggressive. And so what that told us is that the majority of our clients, or the people that we serve, are moderate or conservative investors and not aggressive. And so that means you can tolerate some risk, not a lot, because you want to be able to sleep well at night. So you can tolerate some risk, and you want to have or see some growth in your investment. But you also want to see some income coming in the form of dividends. And that helped us to say, well, then our focus should be on dividend growth companies.
Mm-hmm.
And so that is what we have chosen to do. And that is data driven. That's why
Data driven.
that's why we focus on dividend growth companies.
Mm-hmm.
Yeah. And believe it or not, there are a lot of dividend growth companies out there. There are over 700. And they, well, we'll talk about that later. But yeah, over 700 dividend growth companies out there to choose from. So we have an array of companies to pick from to help to develop and grow our stock portfolio. And because of that, that's kind of exciting because you kind of think that maybe I'm limited in the companies that I can invest in. You really aren't. And for the person who is a more, hi, Dana, and little me. So if as a beginner investor, we always tell you to, when you start looking at companies to invest in, start with what you know. Start with what you're familiar with when it comes to being at home, what products and services you use at home and at work and in your hobbies. Well, given this knowledge that there are so many dividend growth companies out there, you can, instead of staying in that box as you grow as an investor, you can step out of that box knowing that there are other companies that you probably never even knew were dividend growth companies. And those are the companies that also can help you to build your stock portfolio. And that's what we're here to do, to introduce you to some companies that you may not be familiar with, that you can add to your stock portfolio.
And it gives you double benefit.
Double benefit. It gives you yes. And what I like about dividend growth companies is that they will give you the benefit of not only growth, and when I say growth, I mean price growth, but also give you the benefit of income. So you got a double whammy coming in. Yep, and that's what we want. Period.
So
Nancy said she looked at John Deere and Nike. Yes, both are doing well. You know, Nike had a really good run this past week. So kudos for you if you are if you have Nike stock. And John Deere is a company that makes those big machineries. And now that we're into the infrastructure bill, that's what is going to be known as one of the infrastructure stocks to invest in. And that just gave me an idea. We need to do an investor chat on infrastructure stocks. Thank you, Nancy.
This is what happens when.
So how many of you all would like to have an investor chat talking about infrastructure stocks? Let me see if that is something that you would like, because there is a list. In fact, I've already made my watch list of infrastructure stocks already that I'm going to be looking at to invest in. So if you guys are interested in that, let me know, and then that we can schedule a investor chat solely around infrastructure companies, especially if they pass that bill, because we want to be able to participate, in steel companies. Okay, Michelle said yes. Barbara said yes. Nancy said yes. Okay, we'll put that on the list.
I have it. Yeah.
Okay, thanks.
Yep, definitely got it.
Okay, but yeah, that was right on cue.
That was a good idea.
And that's why I like to have these investor chats, because even though we plan on a topic, there's always things that you guys really want to talk about. And at the end, we like to save at least 10 minutes to answer any questions about just general investing that we can answer for you all. But let's get back to the topic on hand.
Okay.
And so what were we saying? We were talking about
the infrastructure stocks and why we are focused on the dividend growth stocks. But along with us focusing on that, there's a method to our madness. So there's keys to building that successful stock portfolio. So
correct.
What would you consider to let everyone know what would that
well,
key
there's
be?
certain, yeah, there are a lot of keys, but I think we want to start off by saying the first key to building a successful stock portfolio is to have a written plan. And we also want to start as we do the investor chats, we wanted to talk about this plan so all of you all can start writing down your plan. So, and just like building anything, if you're building a house, building a stock portfolio, you really need a blueprint to go by and start running your portfolio like a business, like you're a CEO of a business, making decisions and managing your portfolio. So that's the first thing I would say, is that we all need to have a written plan. And it doesn't have to be elaborate. It doesn't have to be some 10-page plan. No, it can be one sheet with bullet points. This. And that's the things we're going to be going over.
Yeah.
To have your plan. And the other thing about having an investment plan is that it kind of keeps those emotions at bay.
Okay.
Especially when things are not going well. It's like, okay, but we're following our plan. So, this is what happens. Or if things are really going real well and you want to get all petty about it, bring it down. It's all
trust
a part
the process.
Yes, trust the process, and you're following your plan. So yeah, that's what we want to do, is we want to have a written investment plan.
So in that written plan, what would be the first step? What would be the first step in that written plan?
The first step in your written plan is to have your goal written out. What's the purpose of this portfolio? And I'll give you an example. When I started investing a long time ago, my primary goal was to be able to send my kids to college with no student loans. That was my goal. That was it. And so it was good because I had a long period, had 15 years to do this. And so what I said to myself, okay, I want to get a little bit more detail. Let me talk about the income goal. And I said I wanted to have at least $50,000 put away for each child in 15 years. So that was my first step, is to write that goal. Now, things have changed now because now that it's all about me. My investment goal is to build a portfolio with dividend growth companies so that I'll have passive income coming in on a monthly basis of at least $1,000 a month from that portfolio. And so that's what I wrote down. Just that simple. One sentence.
The goal. So.
And that's for, to help out in retirement, to pay bills in retirement. I want that portfolio to pay bills. Yep.
Now, what would be the next step?
Well, number one, yes, have a written plan. The next step is, when you talk about having a plan, is to write down how you are going to fund that portfolio or that account, so you'll have money to buy those stocks. Now, that's a personal thing, because you know what your goal is, and you know how much you can afford to fund that account on a monthly basis to buy your stocks. So you want to write that down. You know, if you're working, you've got money that you're earning, you've got money that you're saving, and you've got money that you want to invest. Write it down. You know, out of my paycheck, I want to put $100 a paycheck into my account in order to start investing in stocks. So have it written down. The other thing you could do is not only have it written down, if you can have it automated, just going from paycheck into your portfolio, into your brokerage account. And you don't even have to think about it. So those are the first two steps, I would say, when it comes to writing down your plan.
Nice little tidbit that I learned was the 50-30-20 rule, I believe, where it was 50% is to the important bills, you know, home, car, things like that. I believe 30% is actually for investing. And then that 20% is you're either saving or you're paying for yourself, you know, or you use it for fun. So that's actually a good way to go about it, because most people think that you have to have a lot of money to invest. You don't. Wherever you are, you can use that 50-30-20 rule. And whatever that number is, that's what you work with.
Yeah. And these are just guidelines. I mean, they can change. But the key is to have it written down so you'll have your blueprint there. So pretty simple.
Yeah, I know some people were asking, well, I would need to know the blueprint. What's those 3 steps right there? There are 2, but it's about the plan. Those steps right there, if you start with those, you'll be amazed at where your next step, how you'll feel in your next step,
and how successful
you are. Yeah, that's the word we want.
that's what we're focusing in on, is to build a successful stock portfolio. Yes, I know it's all about the companies, but it also encompasses other things. Yeah, other than analyzing companies. You know, let's write this stuff down. Yeah.
I hope that was helpful. We do want to hear what you guys have to say. Someone said, I believe Nancy was asking, is that
aggressive to bring in 1,000? No, it's not. Because when you talk about how much you want to be bringing in, you're also looking at a time frame. So I am doing this over the next 3 to 5 years. So that it would not be considered aggressive. Now,
no, go for that. No, go back.
No, because I was gonna say aggressive if I said I wanted to bring in $2,500 a month. That's gonna be so that would involve more than just dividend stocks. I would have to go with growth stocks and dividend stocks.
Dividend stocks.
Yeah. Yep.
This is a good question.
You pick stocks that pay out at different. That is
a really
the
good question.
key. Yes. When you are building a portfolio of dividend growth stocks, you're going to stagger the different companies, because some companies will pay out they pay out quarterly. The majority of companies will pay out quarterly. So you have some companies that pay out in January, April, July, and October. And then you have some companies that will pay out in February and whatever 4th month after February. And then you have some companies that pay out in March. So you're staggering so that you'll be getting checks in every month. I hope that makes sense. That is the key. One of the keys to dividend growth investing is to invest in companies that pay their dividends at different months. So you'll have checks coming in every day.
Dividend.
I mean, every month.
The dividend growth. Yeah, the dividend growth
Mhm.
stock, the workshop you did, we still have that out there. It's linked. So,
Yes.
and you do share what some of those companies are. She doesn't
Mhm.
share them all, but she shares some to give you an idea of what you could look for. So that's a
Mhm.
really good course.
Yes, we did I did a dividend um, growth company workshop, and it talks about how is it that I understand what a dividend growth company is, and all of the how do I analyze it, and how do I build just what I talked about so I can get checks coming in monthly. It goes
Mm-hmm.
through everything. It's did it over 2 days,
Mm-hmm.
so that is available too. Mm-hmm.
So like roughly about 45 minutes per video. It's really engrossed. So you
Mm-hmm.
get really good information out of it, everyone.
Mm-hmm.
Seriously, because I did from that myself. But yeah, I'll make sure I'll link that below in this video as well for everyone. And if you're watching on Facebook, I'll make sure I share it out there for you guys so that you know. We would love to hear more questions. I wanted to shout out Little Me Time Spa Services. She reiterated the things that Dr. Marcia mentioned. Have a written plan, write out how to fund or plan.
And write out
Fund your
that
plan,
goal.
yeah. And
Mm-hmm.
then the goal, and then she mentioned the 50-30-20 helps
Mm-hmm.
with.
Mm-hmm.
So thank you for that. That's amazing that you put that out there to help
And
everyone remember.
and don't forget when you write out your goal, write out your income goal. What is it you're trying to achieve? How much are you trying to um, make in that portfolio? Because that will help too.
Yeah,
Hmm.
this is a good one.
Would it make sense
Hey,
to
Miss
have a
Purple
portfolio
Lady.
full of REITs because all of them have? Well, I like REITs. I have some REITs in my portfolio, but you don't have to
Mhm,
just stick with REITs. REITs are just a part of dividend stocks.
mhm.
So yes, you can actually add REITs to your dividend growth portfolio. There's some good REITs out there. And
That's a good
for those of you all who don't know what a REIT is, it is a real estate investment trust. So it's just real estate, investing in real estate.
investing in real estate. Different
Mhm.
way of investing in real estate for
Mhm.
those
Like
that
you may
know.
invest in a company that uh, uh, has a portfolio of warehouses.
Mhm.
You may invest in a REIT that has, oh, I got one for you. Um, uh, Companies that, you know how they have the companies that sell marijuana?
Yeah,
They
marijuana
have,
stocks,
well,
cannabis.
sell the cannabis. Well, if you're going to
Okay,
sell the cannabis, you're going to have a storefront to do that.
structured web.
So there are companies out there that strictly invest in or have a portfolio of um, buildings that they own and rent out the buildings so that people can sell
Specifically for
there.
that. Okay,
Hmm. Yes.
amazing. Oh, Nancy, she's asked the question.
Do you leave the money there or place it in your personal account or just reinvest? Because I'm just now starting with the dividend growth companies, I'm reinvesting all of the dividends back into
Mhm.
the company so that now I'm buying fractional shares of the company. But yes,
Of a company?
I don't take
Yeah.
anything out just yet because I'm still in the building phase. The plan for me is to do this for at least 3 to 5 years until I get to the point where I know that I can generate $1,000 a month, and then the dividends are going to start coming to me
Hmm.
in perpetuity.
Yeah. Nice strategy.
And
I
I
have
say
to
that because,
follow.
yeah, I don't plan on selling these companies. I just want to keep them for their dividends. As long as they're, giving me dividends, I'm going to keep them.
I'm going to timestamp that. That was good advice.
Yeah.
Is there any other questions?
Do we have any other questions? So yeah, what we'll do is, I know this is we're doing only 30 minutes because I don't like to take up a lot of people's time, but I want to give you good information to stimulate you and to educate you to go ahead and start your stock portfolio, and we can help you to help you build that stock portfolio. Yeah.
Yes.
Mm-hmm. So yes, we will talk about infrastructure stocks, and maybe the next. Yeah, why don't we do that at the next one? We'll still continue talking about the plan, but I'll spend about maybe 10 minutes talking about infrastructure stocks for you guys to look at. And yeah, it will include John Deere because that's one of the stocks.
Good to know.
Mm-hmm.
Awesome.
Any other questions? Yeah.
Well, we'll meet again in another 2 weeks?
In 2 weeks.
Yeah.
And certainly, if you have any questions you'd like to ask me, shoot me an email. I am in my office working from about 10 until about 3 o'clock. After that, I'm done. Oh, hi, Barlow. How are you?
Hey, Marlo.
Yes. It's been a while. Good to see you.
I know it's been a while to see her. Good to see her face.
Yes, catch the replay, and we'll be doing this every other Wednesday. So you can put it on your calendar from 6 to 6:30 and join us. And as I say, if you don't catch us then, catch us on the replay, either on Facebook, on the business page, or on our Bookworm YouTube channel.
Yeah, right here. So cool. Well, I guess that's a wrap.
Thank you very much for coming.
Bye.
And as I said, if you have any questions, feel free to email me. Nakia, can you put the
email
address there? Mm-hmm.
Let's put Marcia at bookworminvestmentclub.com.
That's me. You can email me at that address, and I will get back with you within at least 24 to 48 hours.
Awesome, guys. I'll timestamp and put those links down there for you all. I'll do that.
Awesome. All right. Thanks again, guys, for joining us. We'll see you in 2 weeks.
Bye.
And start on that plan. All right. Bye-bye.
Bye.